These are not the only companies that outperform some big cap tech, but they did catch our collective eye. But that was this year. Let's turn now to next year and see what might be on the radar. And welcome back in Citigroup Director of Research for U.S. Equity Strategy, Drew Pettit. Drew, welcome. Happy New Year. I was just a tiny slice of what was a third year of another good run. Do you see a record rally continuing into its fourth year?
We do. And Brian, it's all fundamentals. Like, look, I heard the technical setup at the beginning of the show. I hear people talk about sentiment. But when you get down to the nitty gritty, earnings are still moving higher. We're above consensus. We're probably at the high end of the street. As long as the fundamental story is still intact, we're happy to stay invested in this market and buy some risk and hold some risk into 2026.
I want to be optimistic. It's New Year's Eve. Everybody wants to feel good when that ball behind me here at the NASDAQ drops in a few hours. But I wouldn't be doing my job if I didn't ask what would be the risk to the fundamental strength story.
Look, it's the multiple, and I hate to come back to something that sounds very basic and down the middle, but we're paying a lot for a really good fundamental story. When we really break this down, we think the market is discounting about 10% earnings growth for the next 5 years. That is extremely good. What we have in our projections implicitly is about 12% growth. The problem is if you get good growth, not great growth, that's a reason for people to take profits. So the risk to us, everyone says valuation, but to us, it's really growth living up to those valuation expectations.
All right. Inside the market, you know, there's 11 different sectors. One of them is called industrials. The industrial sector, currently the third best performing S&P 500 sector this year. Now, normally I wouldn't reference a third best of anything, Drew, but that was the first time it has finished in the top three in 12 years. I mean, 12 years for these industrial companies. We've talked a lot about this potential shift in the market. What's your internal thesis for sectors and stocks next year?
Yeah, it's funny. There's a couple stories here. One, it's inflecting growth. So we've heard people talk about earnings are broadening, growth is broadening, market performance is going to broaden. But to us, there's companies that have had negative growth for 3+ years coming out of that post-pandemic high that we're finally going to see some inflections. That plays really well to some cyclicals. Industrials falls in there. We like financials a little bit better. Another thesis, growth, that game's not over. Look, there's still a lot of AI stocks that when you discount the earnings are actually reasonably priced. So to us, there's still AI at a reasonable price out there. And then the last piece, look, there's a lot of companies that have really changed and improved operations. There's tons of these big cap names that survived a pandemic. They've survived tariffs. They've survived a lot of business challenges. There's a ton that are improving ROE from an operational perspective. Those three stories, those three stock stories are the biggest ones we think that'll really define the internals of the market in 2026.
Any sectors out there that you don't like, that you're just sort of negative or at the minimum neutral on, Drew?
It's consumer, to be honest with you. Again, another segment I heard like right before, power lunch. There's winners and losers in consumer. When you're kind of in that world, it's hard to have a really good fundamental view. We're ahead of earnings on pretty much every sector except consumer discretionary and consumer staples. I don't think there's a really great catalyst there for outperformance of those two sectors.
Yeah, and then you got an international view. I know you're the U.S. guy. We'll talk international in the next segment, actually, Drew. But listen, the world has done better than us this year. Is next year we're going to go back to sort of eagle on the shoulder, apple pie USA, or what?
It's idiosyncratic. I really think like AI, for example, yeah, it's much more dominant in the U.S. market. I would say it's at least 50% of U.S. market cap, at least up cap anyways. But when you think internationally, it's not as big of a piece of that pie, but the AI at a reasonable price names are much easier to find internationally. And those off of the tariff lows have actually outperformed the U.S. AI at a reasonable price names. So there's some opportunities there. I think you want to kind of piece these themes together, not just domestically, but globally as well.